I've got news for you. Trading is a very simple concept. Yeah. It's technically a simple concept. Let's check this thing. Even if you have never seen this before, just look at it. When is it low and when is it high? If you guess this is the low, then you are correct. Then you buy here. If you guess this is the high, then you are correct. This is also high and you can sell here. So just keep going back and back. This is low, you buy here. This is high, you sell here. This is low, you buy here. This is high, you sell here. This looks easy. If you can figure it out now, then you are good to go. However, to be able to trade in the financial market, you actually need to be aware of a couple of things. And by the end of this video, my plan is that you will understand most of these trading concepts that's going to allow you to be able to trade in the financial market. I just want to warn you that it might be a little bit overwhelming, but you will get a hang of it very quickly. It probably takes a few days, maybe a few weeks to understand this, and you're ready to go. Of course, trading is difficult because there are many things involved, the psychology and all, but the concepts are easy to understand. So this channel was created to make a trading journey easier, and all I ask of you is a like, a comment, and to subscribe. So let's start with the basics. What is trading actually? Trading is simply buying and selling of assets. So to make a profit, it could either be stocks, crypto, or Forex, or some commodities, right? Commodities like gold or silver, and so on. So as a trader, your job is to be able to know when the market is rising up, then you buy so that you can make a profit. So the market is rising from here, it's rising and it's rising, so you jump in and you go sell later on when it is high enough and you make enough profit. So that is trading. It doesn't get much simpler than that. So if you have never heard of TradingView, please just load the chart and see what is going on. So this is Solana. It's a cryptocurrency. So you can go here and change to, let's say, Forex, and you can see some Forex pairs. You can see some indices, some S&P 500, some bonds, some stocks, Tesla, Apple, etc. Right. So yeah, these are the markets you can trade in. So the next is we have two types of trading. First is the short-term trading, whereby you trade within a few days or a few weeks, even sometimes a few months. And some could be within a day, and some could be within seconds, right? So these are short-term trading. But the long-term investment is when you buy an asset and hold it for long months or years, believing that it will increase in value over time. For example, the S&P 500. So if you go back here, you can see you can trade stocks, you can trade funds, you can trade futures, you can trade, okay, let me just remove this. You can trade futures, you can trade Forex, crypto, indices. You can access them from different brokers. They operate differently, that's the point. But you can trade all of them using the same similar ideas. You are buying low and you are selling high. So let's talk about the tools that you need for trading. So first of all, you need a trading platform. There are many of them, but the most popular one right now is the trading view. And this is the trading view. Just go to tradingview.com, create a free account, and voila. And there are lots of tools that help you analyze the markets, right? So this is, for example, it's a long position projection. So you say, oh, okay, I'm buying here. My stop loss is here and my target is here. So the trading view is the platform for that. You can use other platforms if you want. You can use the MT5 if you're trading crypto. You can use your Binance charts and so on. But most of them still use the trading view. The second one is a broker. And a broker is just where you can actually buy or sell. You cannot buy or sell on TradingView. You can, but it's mostly an API call to your real broker. So which means you have to actually open an account in a broker. So depending on where you are from, your country and whatever, look for the best broker for your country. And it's just a Google search. Just Google brokers where I can trade maybe Bitcoin in wherever you are, and you can see some options. And the third thing is chat, right? So chat is just what you are seeing right now. This candle chat is the most popular chat. We are going to dedicate another video to understand how to read candles or what candles say. But if you want, you can still change it up, use other things like lines. If this is what you want, what matters is that you have the chat. So let's leave the chat discussion for another video. The next thing is strategies. And when I talk about strategies, we are talking about how exactly when to enter. Because we mentioned before that this is low and this is high. This is low, this is high. This is low, this is high. This is high, this is low, right? But now that we are here, do you know if it's going to go down or it's going to go up? So the market can either go up or go down, and you do not know if it's going to go up or down. So you are not a gambler, right? A gambler is somebody who will just say, oh, let's flip a coin. It's going to go down and they're going to sell. But a strategist means that you are going to have something you are checking, some analysis you have done based on historical data to say, okay, we are likely going to go down. That is a strategy. So, and there are many strategies that exist. You are going to find one for yourself, and you're going to work very hard to ensure that the strategy works for you. That is the hard part of trading. So we have lots of strategies. We have the trend following, and the trend following means that once the market begins to go in one direction, you jump on it. So an example would be this. Right here, you can see the market starts to go down, go down, go down, go down. Then you just say, oh, the market is going down. Let me sell. So it's going to go down more. That is a trend. The same thing is happening here. The market starts going up and up and up. Then you say, okay, it seems the market is trending up. Let me jump into the trend and go up with it. So you buy here and you sell when you have made enough profit for yourself. So that is trend following. It's a strategy. So, but sometimes the trends are not clear. Here, for example, what is the trend? It started here, went up, and it's just ranging, right? You do not know. There's no clear trend. Or if you go to, let's say, a smaller time frame, like 15 minutes, you may see, oh, okay, now it's probably trending downwards. The next is the range trading. And, we want to say, okay, the market is going between two ranges. and this creates something called a support and a resistance. So I'm going to show you an example. So an example is this, maybe, I don't know, year 2. So let's just assume correctly that this is a range from here to here. So the market came down, tried to reach this, but no, it could not go up. So it fell down. When it got to this point, the market said no, then it went up. Then when it reached exactly that same place again, but it broke finally over here. So this is what we call a range. So you assume that, okay, this is a resistance and this is a support. So if the price reaches my resistance, it is likely going to go back down to my support. And when it reaches my support, it's going to likely go back up to meet my resistance. Okay, let's remove this and let's remove this. So there's also a breakout trading, which involves price breaking through out of a key level. So example is this. Some people want to trade whenever we break through a key level. And at this point, the key level here is what? This resistance and this support. And there are sometimes the key level is maybe also a trend. Let me show you what I'm talking about. So this is a trend up. It crashed below the trend, and this is a key level. So, and there's some people who are scalpers. And what does scalping mean? It means that they quickly jump into trade and exit. They don't wait for a long swing. We call it swing. From here, it just swings up. They probably say, oh, okay, we're going up, let's just jump in the trend, and when it gets here, they're out. They don't wait, because markets can reverse anytime. Next is risk management. So risk management is one of the most important things, because trading means you want to lose your money. That is the first thing to think about. Don't think about how much you want to make. Think about how much you want to lose, because you can lose a whole lot of money. The mindset you must have if you want to trade is that, okay, I want to make this trade. How much do I want to lose? You will probably win or you may lose. So, but if you lose, what is the maximum you want to lose? It could be $10. It could be $1. It could be $50. It could be $1,000. Once you know the amount you want to lose, then you have to know the amount you want to also gain. So, and that is called risk to reward, which means that, okay, if I'm willing to risk $10, then I want to gain 40. That is what? A 1-to-4 risk reward ratio. Risk to reward. The risk is 1, the reward is 4. So the risk is 10, the reward is 40. The risk is 100, the reward is 400. That's it. Risk and reward. Don't forget that term. The next is stop loss. So, when you are also entering the market, most people, including me, believe that you have a stop loss. Because if the market goes against you, you have to stop it at some point. So, assuming you thought this market is going to reach up to this level, you broke through this line, and you thought, oh, okay, we are going to reach this point. Then you try to buy. What happens? the market reversed and started going down. If you do not have a stop loss, which means if I lose up to, let's say, this amount, I'm out. Then the market can keep going down and down and down until you lose your entire portfolio. So you could say something like this: I'm entering the market here. I want to get to the market. So this is the reward, right? Let's say 3-1, right? So I'm entering here. If the market gets up here, then I will make 3 of the amount I'm risking. If I'm risking $100 and I enter from here and the candle reaches here, I'm going to make 300. However, if the market goes down and it reaches this point, then I'm out of the trade. I'm out. This is called the stop loss, and this is called the take profit. Don't forget this term: stop loss, take profit. If you don't set a stop loss, you could drain your entire account. Don't forget about it. And if you think, oh, okay, what if I allow it to go down and it to go back up? Because as you can see, it went down and it also came back up to meet your take profit, right? However, your account size may not be enough to take this amount of drawdown. I'm going to explain drawdown also. So you might have lost your entire account even before the market starts going back up. So now that we understand take profits and stop loss, let's move ahead. The next is position sizing. So this is more of a calculation that tells you the amount of money you want to risk on each trade. So if you want to, let's say, risk 2% of your account, then you are only going to buy an amount of assets. There are a few calculations always involved with this, but there are different systems and calculators you can use to do that. It's not a big deal. The next is the emotional control and psychology. And this is probably the most difficult part, because you can have a good strategy or a fair strategy that will make you profit, but the problem is, will you stick to it? Because you might lose a lot, but if you stick to your strategy, you will come out on top. Because losing money is hard. Imagine you're saving up $1,000 through sweat, and your first trade, you lost $50. Your second trade, you lost another $30. You're going to be very, very upset. You try to see how you can make it back. And when you do that, you keep losing money because you are not sticking to your strategy, even though it's failing. But because you have confidence in your strategy, you have to keep using it for you to be profitable. So the psychology is very, very hard. You have to be mindful of your emotions, the fear and greed. You have to be patient for your trade to come to you. If your strategy is that you want a pullback, like, okay, once I break through, I want a pullback. If you do not get a pullback, do not enter the trade because it has not met all your criteria. Patience is key. So that is what I mean by patience, for your setup to be accurate before you enter the trade. The next thing is having demo versus live trading. Almost every broker has this demo trading whereby they give you like 10,000 euros or dollars such that you can practice with. It is not real money. It is just paper money. There's no real money involved. So you should be able to first try your strategy on a demo trade account. And when you win consistently, then you can use your real money. As a beginner, do not try to go into live trading first. Go into demo trading because that's when you'll be able to understand how to size, how to set your stop loss, how to move it around, how to set your take profit, how to understand how the broker, whatever platform you're using to trade, how it works. You have to learn it properly first in the demo trading account before you can move over to the live trading account. Common mistakes to avoid as a beginner is that you have to avoid over trading. It's possible for you to keep seeing many setups and many opportunities, but you have to stick to your trading. Say, okay, if I lose this amount in a day, I'm not trading anymore, or I'm going to only trade 2 times a day. Second thing is use stop loss. Well, I mean, you can decide not to use stop loss, but yeah, you will probably learn the reason why you should use stop loss later on. And number 3, you should risking too much per trade. If you have a $1,000 account, then you should not be risking more than 20 per trade or 10 per trade. You might think, oh, if I risk 50, I can make 100. But if I risk 10, I'm going to make 20. But the thing is, it's better to grow slowly and consistently. But then, it's up to you. And number 3 is don't chase the market. Maybe you are planning to enter at a particular point, and the market has left that point. Leave it alone. Wait for it to form another setup. Okay, don't jump into trades because you have a fear of missing out called FOMO. Right? Stick to your plan and wait for the right opportunities. So these are the basics of Forex or stock or crypto market for beginners. And remember, trading is a journey. It takes time, patience, and practice. It is not as easy as you think. We're going to be talking more about it in this channel. So please subscribe and watch out for more to make your trading journey easy. Bye, and I will see you in the next video.